As you can see, I'm big on form. We're also big on substance up here, so I think that the subject is great. People talk about Web3, people talk about the Metaverse. A lot of people are talking about it. It's like a few things you might know.
Including ourselves, right?
Yeah, but how can you actually make money at it? What can investors do? How can they gain access to this? And I was on a Metaverse on the weekend, and I was like, wow, this is like CompuServe, right? Back in the 90s, it's kind of grainy, it's not quite there, but we're going to talk about where it's going and how people can get the most out of it. Let's start with Ioana so please introduce yourself, your company, and also how would you define the Metaverse?
So all in one go.
And then
okay.
Karl will add more, and then Emmy will add more, and Marissa will add more.
Great. Nice to be here, everyone. I'm Ioana Surpateanu. I work for a variety of companies, not just one, James. So I'm on the advisory board of a data monetization platform, Swash, on the advisory board as well of the play-to-earn game called Cryptowalkers, and also advising a DeFi launchpad, Poolz Finance. In addition to that, I am an exec board member for the Multi-Chain Asset Managers Association, and that's about it when it comes to my role. I will spend a little bit more time when it comes to defining Web3 and the Metaverse, and I'll start with a philosophical description almost. So I think of the Metaverse as a user-centric, gamified virtual world, or virtual economy, to be more specific, powered by decentralized coordination mechanics in the form of DAOs, and orchestrated by crypto tokens. So that's the philosophical approach. To abstract away this abstract potential complexity, I would say that for me personally, having been in the space as part of my team at Citigroup, where I was working on crypto, and then after I moved fully into DeFi and crypto, I feel it's for the first time that we have a very tangible implementation of what we have been referring to as decentralized or Web3 technologies for the past decade. And if you look at the Metaverse, right, there are a couple of verticals, but the Metaverse is compounded of a variety of verticals that I think are vital for its success: digital fashion, gaming, NFTs, digital identity, and subsequent decentralized reputation systems, etc. So this is what the Metaverse feels to me. But to also summarize, I feel it's a new way to be an entrepreneur. It's a new form of an economy. It's a new, very much user-centric way to monetize via Web3 technologies. And cool. I know I caught 5 minutes from the previous panel discussing regulation. I feel the gap between what the regulators and policymakers perceive Web3 and the Metaverse to be and what it actually is huge. So we're in for a very bumpy ride. And I'm sure we can touch upon that later, but I'm going to hand it over
time for regulation.
to my fellow panelists to also.
Let's go to the white chair.
Yeah.
Okay, the white chair. I'll tell you what, it's the stinkiest chair.
Well, yeah, so by the way, if we look ridiculous, it is because we sit in a very bizarre way. So.
It's actually not a bad opportunity to be in an immersive environment.
Yeah, exactly.
Karl Tlais is the name. I'm a strategic advisor and founder of iAdvisory. So I actually work with a portfolio of entities around the world who are building the digital economy. Some of those are metaverses, some of those are digital wallets in the fintech space, but I also play a strong role in trying to bring government and industry together to build this new digital economic reality. I'm based in Dubai, been there 16 years. I think it's becoming a nerve center. We'll talk more about it in terms of leading in some of the regulatory arbitrage that's going on. I guess when I look at Web3 / the Metaverse, and I think everything you said there is essentially the fundamental ingredients. I look at it also as a way of taking everything that we've done in the Web 2.0 space, which is where we've essentially been giving everything in terms of our data free of charge to big tech, but also owning it in a more decentralized fashion. So what does that mean? Think of immersive environments. So Web 2.0 being essentially a front pane 2D experience. You know, in the Web 3.0 space, it's going to be more immersive. So obviously VR is going to play a role. Gamification is the be-all at the moment in terms of how you can build upon that. And industry will start to gamify various concepts. Tokenomics is at the heart of that entire ecosystem. And I think immersive is the key. I think everything you look at in the physical world that we're doing today, you could argue that there is the hybrid generation, which is us. The future generation will be born into this new immersive Web3 space. So that's how I look at it, but we'll talk more about it later on.
Fantastic. Emmy.
My name is Lorincz, and I proudly work for Ledger's B2B arm, Ledger Enterprise. Alex is my colleague, who was earlier on the previous panel. And I am also the president of the Crypto Valley Association, which is a community in a wonderful association which was founded in 2015 in Zug. And it pretty much helps to foster collaboration among its members, be it individual or be it corporate institutions. And Ledger is also a member, full disclosure, the members are all public. And when it comes to Web3, I am really happy to see that we are moving away from if a product is free, then, or if something is free, then you are the product, towards owning our data and towards moving to a more decentralized, community-driven setup and business model. And when it comes to Metaverse, it's just so fascinating with my Ledger Enterprise hat to see that how many platforms are being built around the Metaverse and how important security is, because Web3 is all about empowering the individual, empowering the institution, and while you're doing that, allowing them to self-custody. And in order to self-custody, you need to have adequate security. So, yeah, I just want to underpin the role of security in Web3.
Regulation, tokenization, security. Marissa.
I'm Marisa Kim. I'm the general partner of Abra Capital Management. So Abra is a fintech company that's venture-backed, based in California, but we have employees all over the world now. And we offer a variety of digital asset trading, lending, and earning interest on crypto assets. And soon to come, we're offering prime services as well as asset management and funds. And I think, the metaverse is a term that's thrown around. It means a lot of different things, but I think in general, the difference between Web3 and previous iterations of the internet is really that it's open, permissionless, and it's owned by the users, owned and governed by the users, which I think is a really big shift, paradigm shift in previous iterations of the internet. And I think there's a lot of benefits to kind of the speed of innovation in an open system where, you don't have to go through, the Apple App Store, which kind of controlled the entire experience from hardware to software and applications, and they take a piece of revenue from all of the activity on the App Store. And Web3 is really different, so it's really just about anyone can build, and there's all these different kind of composable pieces that can layer on top of each other, and I think it's going to kind of fuel a lot of innovation.
Very cool, thanks. Yeah, it is different. So in your role, Marissa, like with all the DeFi, the different types of funds, and
yeah.
How do you explain it to investors that would come from the traditional finance? Like, okay, I get stocks and bonds and options and futures and all these types of things, and then so DeFi goes like, hold it, where is it? What? How does this? How do you explain it? How does it fit into their portfolios?
DeFi specifically?
Yeah.
Yeah, I think, DeFi, all of the kind of applications in DeFi, a lot of them look very similar to what you would see in the traditional financial system, but it's peer-to-peer. So I think, investors understand very well the different strategies, and there's a lot of lending and trading that's happening on DeFi protocols. So they understand, I think, that aspect of it. I think in order for institutions to really participate in DeFi, there's going to need to be, Web3 identity. So like nobody knows who the counterparties are right now, and we're going to need kind of KYC and AML and some sort of identity, on-chain identity. So we're looking at some projects in that space, and then there's going to just need to be greater liquidity as well.
Exactly. Yeah, and as more people come into it, you'll get a lot of great price discovery, liquidity, and innovation. Karl, on an earlier call, you mentioned tokenization. So you said it was a great leveler between developed markets, and emerging markets. What does that mean? Like, it's a big global thing?
The words I use is the great economic equalizer. And the reason why I use that is because if you just reflect on what's happened in the last couple of years in terms of the emerging markets and what's been going on there from a digitalisation perspective, but uplifting. And when we start to think about the traditional financial market today, and I'm taking my ex-Visa hat, because I headed up the Strategic Partnership, FinTech and Ventures Group for SEMIA, there was a lot of this appetite to bring people out of, or on board through financial inclusion. And the metrics around that was on board with your banks, and obviously that's the first process. But the reality is, in the emerging markets, and probably the majority of the population of the world, you start to look at things differently. Mobile plays essentially the main onboarding process for all of your, not just transaction relationship with currencies, but also just for living. It's becoming more the norm. So if I take this analogy right now and you start to think of it this way, there's roughly 8 billion people on Earth. 4 billion are currently online, right? Of the 4 billion that's online, and probably in this room, less than 0.5% probably even understands half the stuff, or 3/4 of the stuff that we're talking about when it comes to not only crypto, but token economics and the metaverse. When you start to look at it that way, and there's still another 4 billion to come online, there's an entire generation that's going to be born into this digital realm, which is essentially driven by token economics. So token is one word and economics is the other. What are they doing? Well, today, if you have kids, or if you've got young teenagers, what are they doing today? They're playing centralized games. Fortnite, Roblox.
Right.
These are centralized games, Minecraft, which are owned by big tech or entities out there that keep them within that ecosystem, which is fantastic because they're now onboarding into a metaverse, but it's centralized. What does that mean? They're already building their own avatars. They're already, if you don't know what an avatar is, think of it as a digital twin of what you may want to be. So
not an exact copy.
You are right now. So what are they doing? So in my case, I've got some young kids. I've got a 7-year-old and I've got a 12-year-old. One's a son, 7-year-old, and a 12-year-old daughter. And they're already playing these games. And then I look at my credit card transactions and I'm seeing these transactions, purchase of skins, through these centralized games. So they're already building their own representation. What does that mean? Well, that means that they're already expecting this to be part of the future, way that they interact with industry, whatever it may be. What does token economics bring to the masses? If you look at what happened during the COVID pandemic in most of Asia, there was a game called Axie Infinity. And if you're not familiar with that game, I'm sure you should be familiar soon. There were young kids, and I know personally of someone in that age bracket of 12 to 13 who's already got teams around the world playing for them, earning an income. And they've already negotiated an actual percentage of the NFT that they have acquired to play in that game, and basically leased it out. The same concept you use probably for Uber, where you buy an Uber car and then you lease it out to drivers. They're doing the same thing with these NFTs and leasing out that NFT to be able to play in these games. And they're earning an income for their families. So this has been happening during the pandemic. And so a lot of families are relying on that to stay in the game. And that's what token economics has brought to the masses. It's brought up an opportunity. That doesn't mean that that's the only play. But the other angle to it is, if you think of the mature markets, and I think earlier today there was a discussion around mining and energy and sustainability and what, how much energy is being wasted in energy grids today. Today, if I look at energy, there isn't a lack of energy supply in the energy grids. The issue is there is a lack of demand for that supply to be consumed when the energy grids needs you to use it. So one of the portfolio entities I advise, called ION, is actually a protocol which connects current real-world energy grids to community home energy grids through a token economic model, providing an exchange of value for you as a consumer to make available the energy grid to be able to interact with your community and devices.
Like time-of-day discounts
Sorry?
or time-of-day discounts or premiums, but based with tokens.
It builds its own ecosystem.
Yeah.
So it's an exchange of value, and that's what token economics brings. And that's I'm giving you one example of a real-world application. And there you're creating a bridge between sustainability, energy initiatives, both government, industry level, with the consumer, and building that demand. And I think that's where it can be played a role.
Well, Ioana, if we're not the tweens and creating empires of people around the world to work for us, as a Web3 investor, how are investors getting access to this? Are they setting up their own metaverses? Are they buying planets like I've heard people do? And
They're doing a bunch of things. Before I answer that question, I want to ask the audience if they have ever played a Web3 game or they know what it means.
name a few. Is Minecraft one?
No, definitely
Okay, that's not.
No, and I'm going to go and create a parallel between
There's one.
what...
We got one here.
Which one?
Or two.
Sandbox. And, well, yeah. Okay, these are metaverses, so not necessarily, but I meant in terms of like, actually, have you played Axie?
Axie Infinity,
or
maybe?
a bunch of... Okay. So I think it's
You
important
gotta convert the
create-
crowd here now.
I really second everything that you've said, but I think it's important to create a distinction or a parallel between what a traditional game means and what a Web3 game means, and then I'll go back to your original question.
Thanks.
So there are a couple, I'm not going to spend 1 hour here dissecting all of the differences, but there are a couple of major ones. So in a centralized or, Web 2 game, let's start with the developers. So developers rely on the platforms that they build their game on to have user acquisition. And by rely, I mean they also pay a fee for that, right? Centralized games are operating on various servers, all centralized, disparate, fragmented. All in-game purchases that you can generate as a player stay in the game. So you can be a genius at playing a game, but whatever value creation you generate stays in the game and you can only capitalize on it in the game. And I could go on. And I also have, a daughter who plays these games, Roblox and Minecraft. And so I'm switching her to Axie directly because I don't want, like you said, I don't want to have my credit card
have it come the other way.
The
Have it come to
centralized
you.
game.
And
she's talented.
or you want her to earn an income whilst
Exactly.
playing.
So she's
right?
talented, and I'm showcasing the fact that via the talent, even at a very young age, she can generate value that she can then use. Now, let's move to the Web3 gaming, and like you correctly said, that the importance of tokenomics, community, and the interrelation with gameplay, and all of these combined represent decentralized ownership between investors, developers of games, and also players. And this is a very, very new and relevant paradigm. So in a Web3 game, I think the most important, the best mental model to use to assess what Web3 gaming actually means is actually thinking about gaming not as an entertainment, but a monetization exercise. So you basically can also benefit from having fun while playing the game, but you generate value, which you can then export out of the game, transact with, sell on marketplaces, etc. So tokens, this is what they offer, the ability for the player who plays a game and is very good at playing that game to then transfer it into real world value. And I think this is extremely powerful, and you're completely right. Axie Infinity has generated this explosive trend, mostly in emerging economies, because let's face it, in the Western world, not many people need supplemental incomes, or they might, I don't know.
Well, a few
where
dollars.
the market is going. So this is the main thing. Moving towards the financialization and monetization of the gaming industry, and putting the player in the middle, so you'll have user-centric in-game economies. Developers, to touch a little bit on your question, can, instead of raising funds to create a game, release tokens, and then they already have the funds to create the game. There's another thing. So with Axies, in order to start the game, you need to acquire the NFTs, which are Axies, and then what you earn is the SLP, Small Love Potion tokens, which you can then transfer in crypto markets. So we have a situation whereby things are reversed. You start with the assets, and then you build a game on top of them. And the fact that you have those assets, so you have digital ownership, and you can monetize on your online presence and online activity around those, is a very new and very powerful concept. And this is why I'm extremely bullish. So out of all of the metaverse verticals that I referenced before, gaming is the one that I am extremely bullish on. Even if you look at like the whole traditional gaming industry generated $180 billion in revenue last year. And NFTs, Q3, I think it was about 2.3 billion. So combine all of these, and hopefully we will have a merger of traditional gaming platforms into more Web3 blockchain-based ones. I mean, we're heading there. Unreal Engine is just getting open sourced. It was announced today, if I'm not mistaken. So yeah, don't get me wrong, there are still frictions and big ones between traditional gameplay economies and game developers and the blockchain-based ones, but I think we have a very powerful model. And YGG, which is a gaming guild created by the creators of Axie, creates an economy that is also interesting to touch upon. So basically what they do, they buy NFTs from various games, and they lend the NFTs to players who cannot afford to buy the Axies or whatever other type of NFTs they need to engage in the game. Yep. They lend it to them, and the revenue generated by the player is divided between the player, the guild, which takes 10%, and the so-called community managers, who are the people who educate those people on how to play the game. So very complex system. And they're also looking to create a marketplace whereby institutional investors can acquire NFTs and then lend it to people or sell it to people. Think about it as a Web3 gaming integrated with Aave, right? How great would that be? Because we're talking about DeFi. So, and now I'm going to your question.
Okay.
I circumvented it a little bit, I'm sorry. Investors, there are many ways via which investors, institutional and retail, can access games, basically in Web3. So for institutional players, there are very expensive NFT assets that are created in games. Some of them, most of them, are not accessible for retail investors, but they're extremely relevant for the gaming economy and for the dynamic of the game. So institutional investors can invest in those in NFTs, similar to what they were doing 15 years ago when they were investing in tech stocks, right? Because these are durable assets. NFTs, they are created, they stay hopefully on the blockchain forever, so they don't disappear. They can invest in the NFT of that particular game, and then it's part of the game. The value increases as the game gets more traction, etc. They can be part of a guild. They can lend money to these guilds for them to buy NFT assets, or they can buy NFT assets themselves or be part of the guild, etc. So I think we're just starting. This is still at experimental level. There's so many things that can be done. Listen, I don't expect, I used to work at Citi. I have amazing colleagues there. I don't expect Citi to be investing in a Web3 game anytime soon. But I do, and there are VC funds and hedge funds investing in these NFT assets. And I think we're going to see an incremental trend in that direction. And when it comes to retail investors, they can invest in everything. And this is what's exciting about this. They can invest.
Usually it's institutions and it trickles down. This way it's kind of.
It depends. It's a tiered asset structure. That's what I mean, it's still the real world, right? So people with more money have access to different types of assets. It is what it is. So for retail investors, if you're interested, you can be a part of a guild, you can have a governance token in the game, so basically influence how the game develops, how the smart contract is being meddled with or upgraded, etc. You can have the NFTs, which are the in-game assets. You can participate in an IGO, which is an initial game offering, whereby you can buy a game token at discount before it hits the marketplace or the crypto exchange, etc. So there are many ways to do it. I suggest that you deep dive into it and start playing with these things. Okay, not in a way that would lead us to the Terra disaster, but just start experimenting little by little, and you'll find it fascinating.
Let's deep dive with Emmy here. Because you're, Crypto Valley Association, you're obviously looking into the details, into the infrastructure behind it. How, like you said, we hope these NFTs don't disappear. So how are you guys working to safeguard that?
They definitely won't disappear, but I really like that you try to involve the audience a bit more. So I would love to ask the question, who in the audience holds Bitcoin? And then I have another question. Please raise your hand if you have a tiny proportion of Bitcoin.
It should be
just
who
to know
doesn't
at the end
Bitcoin.
of the crypto day, like just the who's in the room. Okay, thank you. And who has a nano?
Marissa?
Sorry?
Okay, a smaller proportion, but thank you. And this is something what my CEO always asks, so I was just like curious. And when it comes to key trends, which is the topic of today, I feel like I can share from the perspective of the crypto valley, but also from the perspective of Ledger. So we have been seeing a lot of yield generation happening, and lending and borrowing is something what pretty much becomes also the minimum. So you don't just want to hold your critical digital assets, but you want to make sure that you're generating yield through holding these securely. And when it comes to key trends or other key trends, I see, for instance, in the Swiss ecosystem that a lot of private banks tokenize their art collection. So they want to decentralize what they own, and they want to open it up to their clients so that they can also own a tiny fraction of this art collection. Then what is also really important with the NFTs, and we see this at Ledger, that we get so many requests on, like, can you make sure that we can mint out of the platform, and we can make sure that when we distribute these NFTs, it happens in a secure way, because some of these NFTs are having a massive spike in price, and it's not enough if just one person sends these NFTs off, but you want to have multi-sig, you want to make sure that the address these are sent to are whitelisted. Then from the Crypto Valley perspective, we also see a lot of ETP companies setting up in Zug and in Zurich, such as 21 Shares, which has been there for a while, or for instance, Valor, and you touched base on Terra as well, where we know that there are NFT or ETPs in the market which are linked to Terra. Well, this has been always an experiment, and no one ever said that through Anchor you can get nearly 20% yield for a long time. And you always have to do your own research before you invest in anything. So exclamation mark, I know that you guys at Abra, and here, everyone who's sitting here underlines that. Yeah, just a lot of interest flowing into the ecosystem of crypto and digital assets, and yeah, again, like, security is remaining a pillar which has to be set up in the right way, and has to be really much taken care of and paid attention to, because we cannot scale if there is no adequate security in the ecosystem.
And Marissa, I'm from Canada. We have a lot of pension plans that do a lot of investments into airports and ports and everything. Can this happen in the metaverse too? Or is it more so decentralized that you would never see an institutional investor go in and do these types of investments? Because it sounds like if you can buy an airport, Heathrow, Gatwick, whatever, used to planes going in and out, can you do the same thing in the metaverse, where they kind of create these things and then spin off money and pay out to people like me when I retire?
Yeah, and there's definitely been some big land sales in the metaverse in Sandbox. If you guys have seen the headlines, like people buying land in the metaverse for millions of dollars, and they're obviously hoping to kind of monetize the eyeballs that come, through that metaverse. But I think it's very early, in terms of buying that land and knowing if that particular metaverse is really going to be, the metaverse that, the traction that it's getting, whether that's going to be successful long term. So I think it's a little bit early to be buying those assets and hoping that they're going to be monetized long term. But there are institutional investors doing that.
How would they possibly know what to buy? And maybe that's for anybody. Like, how would they?
Well, first of all, I just want to touch on something that you said. We're not really fully decentralized yet. So if we look at the current operating model of the metaverse and Web3, we operate in a hybrid. So there are a lot of non-Web3 companies with a strong presence in the metaverse, and you combine them with the more Web3 native one. But we're definitely nowhere near the full open metaverse decentralization ideal. So we have some things to solve, mostly infrastructurally speaking, before we get there. So I can only reference a few: NFT standards and metadata storage, IP and commercial rights. the infrastructure to enable seamless value portability from one entity to the other, how that asset that you transfer from one entity to the other affects the tokenomics of the entity that is receiving it, etc. So, I mean, this is the ideal, and my original definition is what I think the metaverse should be and what the crypto community thinks the metaverse should be, but we're not there yet. And investors, and I forgot to mention that, institutional investors buy a lot of virtual land.
Really?
For games, for instance, so you can buy virtual land, and then if you build something in-game, again, I go back to gaming, because that's, for me, the best way to gamify and financialize your virtual assets in the metaverse. So you can buy land, something is being built by the players in the land, and you as the original owner get a portion of the revenue, etc. So let's not forget, we're talking about MMO, so massively multiplayer and RPGs, so role-playing games, where the whole idea is to create an in-game sophistication, attract multiple players, and have a community that will build in the game. So you, as an initial asset owner, will benefit a lot from that.
So that's where it's going.
Yeah.
I think so, yeah.
I just want to touch on two things, because what's pertinent is security in this space. But the second thing is on the digital land, which I want to touch on. So, I mean, we all know Axie Infinity is the biggest Web3 game out there, but it also had a hack through a third party.
Ronin
Ronin.
got hacked, yeah.
So, and I think it was about 620 odd million was the hack value. But what's interesting is it was Binance was actually able to track down 6 million, I think, worth of hacked NFTs in that hack. So the point is you need to think also quite robustly around the cybersecurity plan behind those projects that are there, because ultimately, and this is where literacy comes in. You know, the lack of literacy and the lack of understanding as a consumer makes you more vulnerable. So, you know, if I had to sort of put a marker out there and say, get educated as quickly as possible, don't just dabble with a proper plan. It's the same way that you do today when you consider buying a block of land in the physical world. You look at the street, you look at the potential of the neighbours, you look at the whole economic environment in that suburb. The same applies, right? So you also
do the
want
politics thing with the zoning as well, or?
Yeah, so you obviously want to make sure it's zoned. But going on to now straight onto the digital land area, look, I've been approached countless times now in the last, I'd say, 3 months around how can we apply this digital world metaverse opportunity for brands in the metaverse. And so you're seeing it already, right? So you're seeing two things. We're seeing acquiring of digital land in certain metaverses like Decentralisation and Sandbox.
Right.
But they're not the only ones. There's going to be a lot more than that. I'm involved with one which is actually doing a mapping exercise right now. But what's interesting is it's a build out of effectively brand islands. So if you start to think of the concept of your brand in the physical world, or whether you even own a physical property, think of stadiums. So whoever here loves sport, and I'm going back to some previous lives because I've lived lives with Cisco and Microsoft and with Visa. But when you start to think of a physical stadium, it's got a limitation of capacity, probably upwards of 60 to 70,000. You know, I think the other day there was the FA Cup final. I'm a Liverpool supporter, so don't mark that against me. But point being is that I would have loved to have immersively engaged in that same stadium. Perhaps if that stadium was present in a immersive metaverse, which allowed me to watch that game with other family and friends who also supported the same club. Maybe I was incentivized as well that if, let's assume Mo Salah scored a goal, if he played in that game, I would get an opportunity to acquire an NFT of that goal, perhaps maybe signature given,
Yeah, the badges
and exchange it for a value in the future. So point is that you can experience in the physical world the immersive experience. Now, why did I mention the stadium? Well, the stadium has a physical world real value. Why wouldn't it have a virtual world value as well? Right? So you start to think of this world is untapped. That's why when I talk about economics, I'm not going to go straight into the white paper, but
I feel like we are like really going, giving a big role here for
Bit harder?
metaverses and NFTs, but we should not forget, and Tony alluded to earlier, that we wouldn't be sitting here if Bitcoin doesn't exist, and we shouldn't forget that.
Right.
That this is the very first cryptocurrency which started it all, and a lot of development is happening also on Bitcoin when we talk about key trends. Just as we are getting to the end of this, I want to put it out there that Lightning is something what you should all look into, and also Taproot, because we want to build infrastructures which help to preserve our privacy
Right.
to some level, at least.
However, funnily enough, the team behind Libra has now created a startup building on the Lightning Network. And this is, to
Some
me,
things need more
They went
time
to the late side.
than others, but let's see how things play out. It's nice that we have different opinions, and
No, I do share everything that you've said. I just feel it's weird that the team behind Libra, which is a failed experiment, which resulted in the biggest regulation in
resulted
Europe,
in DM and
right?
then in Meta, and
And now they created Lightspark, right? They created
Yeah.
Lightspark, and it's cool. I
David
love the fact
Marcus.
that someone is building on the Bitcoin network, but I would have preferred it to be someone else, maybe. I don't know.
Do we have time for a question from the audience? There we go. Well, halfway up.
Thank you. Before the pandemic, I don't think I heard a lot about the metaverse a lot. Maybe I wasn't reading the right articles, but during the pandemic, that's when you heard about it, and you heard about these acquisitions like Facebook and Microsoft and acquiring that gaming company, and then a lot more emphasis put on the metaverse. Do you think the reason why there's been a lot of talk about metaverse is because we've all been in this sort of lockdown phase, and now we think that because we're going back into the normal world, we're going to be acclimatized to this metaverse, and all of a sudden we're going to say, yeah, let's do it? Because to your point, I mean, to your football analogy, I mean, yes, I would want to be in an immersive world with my family or my friends, but I would prefer to do it in person.
Now you can actually go do it, yeah.
Right? And drink with them and cheers with them and toast with them, and I wouldn't want to put on a VR glass and have to worry about adjusting the, so I see your point, but also the other side of the coin is I sort of disagree with it, because to the other point, people buying land for $1 million, is that really justifiable? I mean, are people really thinking that in 2 years' time, we're going to be living in this immersive world, spending money there, and then come out to the immersive world and then go to a restaurant face to face? And yeah, I'd love to hear your thoughts on that.
Yeah, look, totally. I mean, let's think of the brands that are out there in food and beverage, just a basic one there. Who's aware that McDonald's has actually filed a patent for creation of a virtual store in the metaverse? So you're familiar with that. Red Bull, about 6 weeks ago, did the same thing, where they're going to have a Red Bull experience zone in the metaverse. And they're going to obviously create NFTs from all the collectibles that they've got, and they're going to make it available in this branded area. It's interesting, but brands are moving there. To your point, you're not going to leave the physical world experience opportunity when it's there, but the opportunity is greater than the physical world attendance. So if I think of a stadium, there's a capacity limitation. So I'm here in London today, but I wasn't here 2 days ago. I was in Dubai. So my only opportunity really to get a similar experience would have been remote. So no, I'm not going to say it's going to take over, but far away it's not going to happen. But the greater attendance may well be an online attendance through a different experience. Not necessarily only through VR, it could be through the hybrid mobile experience. Let's not underestimate that you can get a very immersive experience using your mobile. It's just that a lot of the entities are not building that form factor immediately as a launch pad. So that's going to happen. I think that's the first thing. So in terms of brands, I was asked this question by one of the publications in the UAE a couple of months ago. Fashion brands and representation in the metaverse, is that really something that's real? I mean, why would I do that? The reality is it has a value, and the reality is Gen Z is going to define that value. And Gen Z is everyone born after 1990, upwards of 2010, is going to be, by some estimates, it's going to be, and this was a study that was done across 13 developed and emerging markets of a Gen Z audience representing around about 4 billion people. And they're expecting over the next 10 years, $33 trillion would come through that economy in some way. Not in the metaverse, nothing to do with the metaverse. This is the economic value of the generation across those markets. Where are they going to be spending that revenue? Where are they going to be spending and being active in that economy? So I would argue that Gen Z is already used to this world. So therefore, you need to plan for that world. You need to be ready and available in some way or form. But you have to have the underlying value of regulatory environment and policy which allows that to happen. Now, I've been doing this at Dubai, so I co-chair the Capital Club's Business Innovation Steering Committee, and we've been bringing in industry and government to look at policy, law and order in the metaverse. We did the first one back in December. And we actually came up with what are the key challenges of Web 2.0 that apply to Web 3.0 from a policy perspective. And then how do we then bring together some recommendations that need to go up to the top to get some direct review and analysis. So we then ran a second session and we came up with some recommendations, I think about 8 of those. So the idea is wherever you are, bring industry and government together to help shape some of this. I think later on I'm on a panel around,
Maybe all the governments will be on the metaverse too. Then would be.
Sorry?
Maybe all the governments will be on the metaverse. It seems like a bit of an arms race.
Well,
Everybody's got to be
You
there.
guys are
South
familiar,
Korea,
so Dubai, look, when your regulators in the metaverse, that tells you everything, right? So a couple of weeks ago, Dubai announced that the Virtual Asset Regulatory Authority will have a space in the metaverse. Why? That's where customer experiences, immersive experiences will start to take shape. But it tells you something as well. It tells you that there is a recognition that that's where things are moving. And I think you have to be ready for that. So don't underestimate that the creative economy is unknown yet. Yeah, we hear estimates of 13 trillion, 7 trillion, depending on who you speak to, JP Morgan, Goldman Sachs, whoever. But the reality is it's going to be a huge economic opportunity. So the digital economy is going to be an enabler. Every industry will create some kind of model around this, and token economics is going to be the exchange of value within that.
Well, let's see if we do this in the metaverse next time, or in London, or in Dubai. Are we at time now, or? Okay. Thank you to my panel, Marissa, Annie, Karl, Ioana.
Put our hands
We'll be
together.
outside for more questions if you like. Continue the debate.